bio. Disclosures are very important. Please read them. Trading stock and options involve risk. Trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should performance, you can see the relation. All right, before market opens, very important to look at your trading plan. It should be documented with the rules in terms of how much money you're allocating and how much you're willing to risk. So I propose, again, there's uncertainty in the market, right, rather than expected. Inflation from European Union and Britain specifically came in harder than expected. And, good news is, bad for the market. Right, too good. If the news is really good, it's bad for the market. If it's really bad, it's bad for the market. It's only good if it's kind of within a certain range or trend. So you don't really know what the next move in the market is. So it's very important to. So then, how do you manage the uncertainty? How do you manage the uncertainty? Right, because we could break to the upside to all-time high, or we can, break below. Just depends on perception of. Whether we will or will not have recession this year, right? And what the earnings look like since we just started the earnings season. So it's very important to have specific rules. And I propose to always have 4 positions. If you started trading, you're still kind of not confident, or more than 4 positions, 2.5% risk per position. And at this point, as long as market is not breaking to new all-time highs and small caps continue to deteriorate, if you're comfortable trading options, maybe QQQ put spread, right? On the upside, Japan breaking out, some of the semiconductors breaking out, like NVIDIA and AMD, maybe Verizon is in strong uptrend. But so you have 2 bullish, 2 bearish position, right? That is very important. There are a lot of signals. That's what can get you in trouble, right? You want to make sure that you only have these rules, right? And that is the most important part. What that drawdown is. So look, we do have tools, right? We see 10 days for 80. Let's see, how's QQQ? Is it still positive? QQQ actually turning negative too, right? So QQQ negative, S&P negative trend, right? So I'm going to look. So S&P is negative. I would down 2% pre-market. QQQ is down 80 basis points. So right now we're trading in a well-defined range, right? Short term 473 your support. We're already below that. So if in next couple of hours we are still below the this week low. 1, 2, 3, 4, 5. Below this level, right? Then this would be overhead resistance. Below that support, at least marginally. Next level is January low, right? January low is around 467, right? So that's a major support too, right? And because we're below that level, 472. Model predicted that 470 will hold. We'll see if a trader. I would use support number 2. Longer term, the breakout August is 460, right? Most people are bullish. This is just a small term price fluctuation, reversion to mean. If we break below 460, then structurally, you see bigger issues. And you kind of already see it in small caps and regional banks. You just don't see it, in NVIDIA. You don't see it in AMD and Microsoft. They continue to go higher. And that's what's holding the market, right? Is some of the Magnificent 7. Well, if you're using support 2 for then your stop loss, I would say 1%, right? That would be 1%. 467, 466, which translates to, let's call it 5 points. So it's easy to calculate, right? If it drops 5 points, 60 would be, 10 points, right? So 1 or 2%. If we drop more than 2% in SPY and staying below 460, couple hours, couple. Any questions? Okay, so we have IWM short position continues to deteriorate. Regional banks had underwhelming earnings. Even though CFG and USB right now are slightly flat, but let's look at Schwab. And USB. USB is kind of flat, so I still have time. Schwab is getting close to the short strike 59. So let's look at our pre-market. So it's continued to deteriorate, right? $60. It's been so then I would wait 15 minutes and see if it makes sense. I mean, you can sell short if it gets close. It's not that close yet. Overhead resistance is around. Monitor. So let's see. So Schwab is down 6%. PNC is down 1.25%. USB is flat. CFG is actually turning positive. It was down 3%. Not turning positive. So let's USB. Let's try to close. I guess USB is flat. We'll try to close both. But back to close. USB 44 call. Back to close. It's pretty liquid. Okay. Place orders. The hedge. I can close the hedge. Debit, credit. No, but long credit 0.90. Right, IWM was half of its value. Right, this was the long side. Think of this mirrored call as the insurance. $1.60, but I'm up on the short stock significantly. I think cost basis was from 193 or 94, so $6, right? So that's that, and I still have a short IWM. So that's IWM position, and then USB. Okay, so I would close the short call. There's a lot of premium, right? Okay, so I'm out of USB. Right, then they, in terms of premium, collected 12 cents and 15 cents, so 37 cents, right, of premium. In short put in short call on a $40 stock, it's almost 75 basis points. So that's a lot of premium for the historical, 2 standard deviation move on USB. Schwab, on the other hand, is a different story. Continues to deteriorate. stock against it to hedge your short put, because short put you're bullish, short stock you're bearish, then you try to, as you can see. I mean, usually I do want to wait for 15 minutes, kind of to see where that support is. Or you could close the short put, right? That's another option. I closed it for 44 cents. I collected, I think, how much did I collect? 30 cents. On Schwab. Schwab, you don't see it in, you're not going to see it in earnings power trader or so you're not going to see it, the orders or positions, because that's, I just did it in my personal USD. I did in both, right? In personal and in trading block yellow tunnel, Tradespoon yellow tunnel account. USB, I did both. Schwab, I only did in personal. But if you were in the live trading room last, at the closing bell, I explained why, right? I mean, just less risk, right? $70 stock versus $40 stock. One contract is less exposure. Plus, it looked like regional banks already oversold, and based on PNC price action, it was stable, right? Morgan Stanley was significantly down, right, yesterday. So Schwab kind of follow, Morgan Stanley earnings. So in terms of aggressive power trader, right, same thing. They just, instead of earnings, these are short-term trade. It picked up Disney, DocuSign, and Visa. So you would trade them the similar way, like as hedging Schwab. C's should outperform significantly down. What is it down? So 75 basis points on S&P, 1% on QQQ, and Visa and Disney are up, right? DocuSign is down. So I mean, that's good. They are in uptrend, continues to trade. They're divergent from the market. Okay, maybe it makes sense to go long. Schwab continues to deteriorate. Let's see. Okay. G turning positive. So it looks like just rotation, right? The value stocks were out, underperforming. We do have big VIX jump, right? This is Fred's call. We did the VIX selling put spread, and they're actually expiring today, right? So there's a lot of expiration, liquidity issues, right? Rebalancing these positions. And then you do have a big drop in China in terms of their GDP number came out, and I think sales numbers came out, and it just continues to deteriorate, right? After retail data, 10-year is up, right? So 10-year yield pushing higher, 2-year yield pushing higher. Instead of steepening of the curve, it's flattening of the curve again. And dollar higher, so you see the reaction in QQQ and spiders. For now, yeah, I would look at, well, last week low, marginally lower. So if this level doesn't hold, right, 471, maybe 470, it does open up the door to January lows, 467. We'll see if we can get there. Meanwhile, let's see. Once we have 2 candlesticks completed, let's see. So Disney. I mean, you do have a support and 92. That's, you know, market is just deteriorating. It's going to pull all the boat below. But on the other hand, it's not that far from that's, you know, 467, right? Support, which is only 1% away. So probably this 1% on Disney, you know, if it drops to $92 loss, my goal on a $10,000 account not to lose more than $100. And then I need to make a decision, right? Spiders is probably going to be around 467. All right, Spiders is probably going to be around 467 if that happens, and then I make a decision. You know, is the internals are deteriorating in the way? You know. In options, that's a very common question. It would be the same thing. I would buy in the money option call that expires this Friday. Right, I think we're suggesting here, you know, January 19, 93 call, right? And maybe even go lower, 92 call, and look at the delta, right? And if I'm looking for 80 cents, right? You know, the idea that option is just a substitution. And when you're trading 100 shares of Disney, you know, I mean, 100 shares of Disney in one contract is the same. But if you're splitting the trade, then it's not the same. So that would be my thought process. All right, so I'm in Disney now, stock, right? And then I'm gonna try to squeeze. Same thing, I would look for 0.5% profit on half of the shares, especially on a down day. That would take us to 40 cents, 93.20. Let's look at spiders. What's the session high? Session high is 93.76. So 93.20. And then sell the other half of the shares, try to make 1%, which would be 90 cents. Takes us to below session high, 93.60. I would do 93.60. And then you have a choice. You can just hold it till the end of the day, right? Especially if the market internals disintegrate, you know, continue to deteriorate, then you probably want to, you know, close, you know, by end of day. If you basically, let's say spiders, well, I don't know where they're going to close, right? Model sees 470. So let's just assume that model is right, and we're not going to be too much significantly lower than 470, right? You know, let's say we do close at 470. You know, at 467 you're going to get out. That's your stop loss in S&P. So then you can hold Disney maybe overnight. So it just depends, you know, what the market is going to look like. So let's watch Disney. And for those of you who are on Schwab, I would watch Schwab. It continues to deteriorate. Right? Looks like it's found support. It could, you know, you could have initial reaction. It's a strong stock. People like Schwab, so you could yesterday. It dropped. There was a small rebound, but then it continued to deteriorate. Let's look at KRE. So it looks like KRE is below this breakout level. So these are your Schwabs of the world, and let's just move this line here. Powell, right? So it looks like now we give up most of these gains, and more importantly, we're below August highs. So I would watch the August high. You know, I mean, it looks like it's bouncing back, right? Big reversal. So it looks like it's exhaustive for now, but you know, I would watch this line. If we drop above that, then the sell-off in KRE is in pause. If not, then Looks like Schwab is bouncing back. Looks like Apple is retesting January lows. So important support level for Tesla, same thing. So retesting January lows, continues to deteriorate. Very important level for Tesla, right? This 200 level is October lows. So it's already retesting the 23 lows. Not 23 lows, but October lows of 23. So if it breaks to that level, then next level will be 160. But banks are actually turning positive. I don't know if you guys have any questions. So let's see some of that. So Germany, right? There was inflation data higher than expected. You already see more meaningful reversal below 50-day moving average. So Germany, right, IWM is still so continues to grind low, right? It broke through the support level that we talked about. It so bears in control, right? This decisively breaking this downtrend, but it's an ABC pattern, right? It went from 205 to 192. So let's call it 15 points. From 196, 15 points would be one. Approaching 200, it's going to retest 200-day moving average, right? Next, if this 50-day moving average doesn't. And then carry. Good morning, Fred. John, market choppy. Out of the QQQ put, I still have SH, but I am out of the QQQ put spread, right? 420, 415, 370, right? So I mean, this helps you to offset some of the losses in bought it for 283, closed for 370. right? So it's, I mean, helps you to 30-40% profit. So it helps you offset some of the losses in the portfolio. All right, so QQQ got filled at 370. Thank you, John. Jeff, if you're, I would say no more than 4 positions. Yeah, I still believe no more than 4 positions, unless you're an experienced trader like John, right? You have, you know, larger account, you know the process, you trust the process. Okay, you can have, you know, 8 position, 9 position. But if you're someone new and you still kind of, you know, trying to build a routine, you know, trying to just start doing the journal, I would say 4 positions, right? Because we have a spectrum of all the traders, right? But I would say, unless you can wake up in the morning, look in the mirror and say, I know what I'm doing, I'm confident, you want to, if you cannot do that, I would just say 4 positions, right? Just have 4 positions. I mean, obviously I do have more than 4 positions because we have entire spectrum, you know, but for average retail investor who are beginning their journey or maybe in the middle of their journey, but they're still kind of not 100% sure, I wouldn't have more than 4 positions. I mean, you know, it's too early. Earnings season just started, right? Banks don't look hot, right? They're, you know, they're kind of in trouble. But, you know, my favorite, you know, again, kind of you know, these, your concern, you do merit calls, right? Because, I mean, right now, maybe not, or like, let's say this example, right? So we were trading, this is what, January, Thursday, 11, right? So last week low, right? So last week low is 472.51. We broke through this level. I mean, it's only been 27 minutes, but still, we broke below that level. The question is, where are we going after that, right? So you're not sure whether this level is broken, right? Or, you know, you can wait, you know, candlesticks on our chart. You know, some people wait for confirmation tomorrow, but let's say you think that this level is broken and we're not going to trade above this level anytime soon, but you're not 100% sure. So then you would sell short the stock, right? You think like market makers, you think like professional traders that are wanting to neutralize their delta, right? Their exposure to the market. So if you sell short the stock, what is the problem? Well, the problem is that this is fake, you know, and then we have earnings season started, and, you know, Microsoft, Apple is printing cash. You have a big reversal, NVIDIA was AI, and, you know, you have, I mean, there's a risk to this, right? Because there is a premium in buying calls. Right now they're cheap, right? VIX is very low, right? I mean, it jumped today, obviously because of the expiration, but it's still relatively low. So, you know, you buy insurance cheap and you sell short the stock. You know, if it decisively gets above, back up, and you see it's breaking highs, okay, you unwind the trade and you get out, right? It was the same analogy that I did IWM trade, right? I basically, you know, when it was in October, I think, right? Those were the 2 trades. Same thing, when we reach October lows, right? Somewhere in here, I basically said, okay, we're not making any lows, long to hedge or put spread. So if it went down, you know, you kind of hedged, right? But if it started reversing back up, you know, that's where you capturing, you know, a lot of momentum to the upside. Same thing was on the downside. You know, I said if it breaks 200, well, market cannot meaningfully break out. So I went short IWM, right? When it dropped below that level, short or call spreads to mitigate the reversal, right? Not every breakdown is confirmed, right? Sometimes you have, you know. So that would be my strategy on the larger account. Smaller account, you can still do, like, let's say, ratio spread. You can. Disney has news about board member. Not sure. So, I mean, the model did pick it up as one of the candidates to go long. I mean, it did drop. So, how much are we down? Am I down? Dollar. So I am down. So $1.30, right? So I'm down more than $100 at this point. So if it continues to deteriorate, then maybe I should just get out of the stock and cut my losses, right? Because it's been 9 o'clock. Inflation data in Europe, it didn't know about retail sales, it didn't see the jump in rates, right? So then, you know, those are different variables, right? 10-year continues to go higher, right? So that's it also breaking out. Right, 10-year yield is also breaking to the upside, right? We talked about 50-day moving average and potentially 430, right? Long-term over. So we're above March highs, which is, you know, significant. You can see big jump in VIX, right? Up 10%. Oh, gold miners are selling off. Silver. So stronger dollar pushing, you know, value stock, cyclical. All right. So we have to monitor Disney. 902. Let's see. Let's look. Yeah, it doesn't look like it's fine in a bit. I'm gonna get out, right? So I'm down $100, right? So then, I mean, $1, depending on how many shares you bought. It's 91.45. Yeah. So I'm gonna get out of those trades. So look at spiders finding spiders actually. These, let's see, Visa. Okay. So Schwab also recovered. Short-term next 6 months. So it's one of the strongest sectors, right? It looks like a double top to me, triple top. It is rolling over into the earnings. Again, expected to pull back, right? Kind of following cyclicals, right? We said you can have small caps rolling over and, you know, QQQ going higher. At some point, they will converge, right? You have these divergences, but at some point, they're going to converge. Doesn't look like there's a panic in the market, but you can see that outside of QQQ, like ARC Innovation, KRE, they're in a strong downtrend, right? And they're breaking through main support and resistance levels, right? They're breaking through support and resistance levels, so I would be careful, right? You know, I think 6 months, you know, if you ask me 6 months, I think market is going lower. Everything's going to follow to a certain degree. Most of the stocks or ETFs will follow certain degree to, you know, probably reaching 440, right? I mean, I don't think 460 will hold, right? I don't think 460 will hold. So I think it's in the next couple months, it's something like this. We hold the 440 will probably hold. 200-day moving average has been a strong support for the market, so I think it will hold this time, right? Then we rebound. I mean, potentially making new highs, right? Marginal new highs, right? Volatile market. But then the next iteration, it was a summer, right? I'm going to make another assumption that selling may go away. right? And then we have a bigger pullback. And then the size of that move depends on, you know, macroeconomic data. How many rate cuts we're gonna have? You know, are we in earnings expansion, or are we in earnings deceleration, right? So, but I think that's the path for the equities, right? First leg down, right? Then up, and then more meaningful leg down. And then the magnitude of this move, right, will depend on, you know, macroeconomic data and interest rates. But into the earnings, I would take profits, right? On most of the, have this decisive breakout. I mean, one day doesn't set the trend. I mean, if you do see it's rolling over in the next couple of days, you know, same thing. As long as it's above 500, then bulls are in control. We'll probably stay above 500 until the next earnings, if I have to guess. Right? But price patterns, right? If they're not considered to be AI chips, right? Like, you know, then maybe like Marvell is a perfect example where it cannot break through the June high. It's kind of rolling over, so, you know, then it's in trouble, right? Then it's in trouble. Let's see what's going on. Let's look at 10-year, 1 hour. All right, so it looks like yield is pulling back, or it continues to go on high. Let's look at Disney. I didn't close Disney. Let me make a decision on Disney. Fortunately, there's not much support till 91. 91 is going to drop more than I anticipated. And not recovering. Okay, so I'm out of Disney, right? I mean, it's down instead of 1%, almost 2%, and it doesn't look like it's catching a bit. I mean, it could recover, right? It could recover, or it can continue to deteriorate. So I'm out. But, you know, the goal is to stay within that range of maximum pullback. All right. I think spiders are recovering slowly. I mean, it's still at session. It's trying to break through session, open session high, right around 472. So I would watch the gap. Right, bulls will try to close the gap. What used to be. So I would watch this level, 472.42. Up, we're trading in the range, right? And we're in the middle of the earnings season. So to me, right, when you buy here, if you longer term trade, you're waiting for breakouts, either to the downside or to the upside. So until it makes new highs, I would not chase it to the upside. I mean, until it breaks below 140, I wouldn't be overly bearish. Yeah, I'm obviously a little bit more bearish on the market, so I think everything's going to go down, but it doesn't have to be that way. All right. Short-term resistance up. Yes, 10 years up, turning down has been very good indicator. I do agree, right? We looked at MMFI. It is rolling over. And we know that extreme bullishness in the market. And we know VIX is expiring today, right? So these are just a recipe for, and Disney, you know, model, you know, it's not like the model is completely wrong, but, you know, Disney was one of the strongest stocks, right? Short term. So if you see these short on Disney, you know, DocuSign, if you do see them rolling over, you know, then, you know, it's a problem. How big are the positions? So Jeff, positions, again, I would go through the exercise, let's say spiders, right? I would go in terms of position size. It's not how many contracts and it's not how many shares. It's how much risk you're willing to take. So for spiders, I wouldn't take more, if spiders is one of your positions, I would basically say, if you're day trading, I would say 467 is your stop loss. If you are medium-term trader or short-term trader, 460, right? So the size is that at 460, you don't want to be down more than $250 on $10,000 portfolio. So if it drops 10 points, you can buy 25 shares. 25 shares is $10,000, right? So you basically allocating all of your money into this trade, right? And you don't want to buy in margin. So if you follow those rules, don't buy in margin stocks, right? If you do options, it's the same thing. Options allow you to leverage, but it's the same thing. If you, whatever the strategy you buy for options on spiders, at 460, you don't want to be down more than $100. So you can do, $2.50 for your spread, and if it's down 50%, you're out. Right? So in terms of risk management, it's always the same rule. It's the same rule. Speaking of Bitcoin, let's see how's Bitcoin doing. So it's really looking weak. Crude oil pulling back. Okay. Let's look at QQQ now. Let's look at spiders. It continues to grind higher. So thank you for sharing waste management. Let's look at one-day chart. Yeah, so one-day chart, it looks strong 1 week. These are perfect setups. All right, so it's consolidated. It's trading very long time at 170. Now it broke out. Okay, as long as it's above 173, the sky is the limit, right? If it drops below 173, okay, down, no problem. The model, thank you. TDG, aerospace, defense, spending. Let's see. Yeah, so it looks very strong. Thank you for sharing. Aerospace and defense continues to grind higher. LMT is underperforming, right? NOC. Kind of been stuck in the range. RTX. Same thing. So yeah, TDG does look strong. They're also liquid. Or not as liquid as the other one. Let's see. I mean, most of these names, very little volume. For a reason, people don't trade them as much. So looks like area is starting pulling back. Let's see how Schwab doing. Yeah, Schwab also started to pull back. I think they're now following. Kind of the same pattern. So you can short Schwab, was stop out 62.42. On the option. So here it just depends. If we're talking about this, let's say IWM strategy, right, which was more of a longer term trade. I went out to February, right? I went out to February because this was at the time I got into the trade, right? Under this. Right, so sell short, right, so sell, so when I sell short at 193, I needed a hedge, right? This is back in January, right? In the beginning of January when the market started pulling back. So my time horizon was February, right? I kind of figured either January or by February we'll have earnings, right? And small caps and banks will already announce earnings. So I was right on this, my theory, it basically continues to deteriorate. So I went into a February, right? Back on January 3rd, I didn't go to January, I went to February. When I do earnings strategy like USB, right? I'm going to weekly options, right? For Disney, right? For Disney, I, instead of trading, if I didn't want to buy stock, let's say I wanted to buy options, then, I would be trading, weekly options. So it just depends on Disney right at 50-day moving average. Yeah, I mean, it could hold, right? That's 2%, right? So it doesn't make sense, the 50-day moving average. I mean, if you have long-term horizon on Disney, this was supposed to be a short-term trade, right? Short-term trade, aggressive, day, couple of days. Obviously, if you have a longer-term horizon, maybe you hold, right? Especially if you're down only, $100 or $150. If you're down $250, you're out. If you're down $150, $200, you can think about it. I'm just a little bit concerned that it's underperforming spiders, at least for now. Well, it looks like it's found the bottom and trying to reverse. Okay. Kevin, for sharing. I mean, yeah, we have Davos, we have Fed speakers, so there's a lot of news, right? Tesla lowered their prices in Germany. All right, guys. Let me see. That's all I have for today. Let me see. Just want to make sure. So approaching. Okay, excellent. The day. So it looks like cyclicals, already, if you look at the cyclicals in general, they're probably going to pause their descent, right? So, so cyclicals are actually almost went positive, but now you have stronger move in QQQ and semiconductors. Not looked at for a while. Thoughts on the seasonal chart? Thoughts on seasonal chart? Let's look at seasonal chart. I mean, correlation has dropped, right? Correlation has dropped to 53%. Right? We were at 70% in December, November. Correlation has dropped to 53%. So that's one observation. Volatile, right? We actually dropped, and then, but first 15 days usually up, and then into the February it's downward slope. So I still think that's going to continue, right? And at least into the Fed decision, right? To January 28th, it's continued to be down. Then when Fed speaks, it's hard to say if they're going to sound hawkish or dovish. So far, when the Fed's, for the most speakers, right, district speakers, we had, what was this guy's name? Waller, right? So Christopher Waller talk, if you're bullish, then, he sounded dovish to you. If you were bearish, he sounded bearish, right? Because he did say, maybe we're not going to make, as many rate cuts as everybody anticipated and not as early in March. But then he did say that, inflation is subsiding, we're reaching our 2% target rate. So you hear what you wanted to hear. And I assume all of these speakers, it's going to be the same interpretation, right? Retail sales did come in better than expected. That caused the initial jump in interest rate, right? Higher for longer. Fed probably will not lower in March. So that theme continues, right? That theme continues. Next trigger is January, right? Next trigger is January, I think 30th is when he speaks. So after that, we could have a rally, right? We could have a rally, right? But until then, we still have 2 more weeks. A lot of things can happen. I mean, all eyes on earnings, right? So far, regional banks are, they're underwhelming. Terrence, Magnificent 7, I did. So it looks like Magnificent 7 today are under, let's look at the chart, Magnificent 7 chart. CNBC. I mean, it's stalling, right? If I can zoom out, zoom in, let's see. Sorry. So it gapped, right? It made maybe marginal highs, but I would call it double top, right? And we'll see in the next couple of days once earnings starts in technology, what does it look like, right? I mean, as long as I'm not actually July highs of 2023, right? So 7. If they continue to deteriorate, right, below 200, right, on this chart, then the pullback is going to accelerate, right? Then the pullback is going to accelerate. Right now, it's trading in a healthy range, but momentum is deteriorating, and we're not going higher. Then, if we're not going higher, then we either go in sideways or lower. Look at SPG. I have puts on Mendelez and MET. Puts on the Mendelez and MET. Mendelez is consumer staples. A lot of people are bullish on consumer staples because that's where people are going to hide. Let's look at. I mean, for now, it's in strong uptrend, right? It's above 200-day moving average, above 50-day moving average. I mean, it is trading below this level, so I would wait, right? I mean, obviously, if it breaks above, but you do see this crossover, right? It's about to cross over 50-day and 200, and usually it's a bullish sign. Usually, it's a bullish sign. So it's kind of, there's no clear cut. And it's outperforming XLP in general, consumer staples, right? So you're shorting one of you're better buying puts on XLP than Mendelez, right? Because Mendelez looks like a strong stock. I mean, unless you have an opinion about earnings, I don't know what's going to happen in 2 weeks, but it's all about earnings. Going into the earnings, it looks like it's sideways. Then earnings, it could be. I thought UNH is going to be up, right? A lot of people were bullish. It went completely the opposite way. So you just don't know. MetLife is insurance. One of the strongest stock, right? Buying puts on strong stock is, I'm not sure. Unless you have a stock, then it's fine. But if you just outright shorting stocks, you probably want to short weak stocks. Like IWM looks weak to me, right? So you buy puts on IWM, not on Mendelez. We went over seasonality. Thank you for seasonal chart, not strong correlation now. Where is your info on the trading plan for position? On yellow tunnel, in terms of trading plan, if you have, like, say, earnings power trader, you could have their guides, right? So I would look at the short-term trading plan, confident, and click on tutorial. So that's yellow tunnel. On Tradespoon, we have more educational content. So you can go to Learning Center, and you can go to Trading Guides, right? And Smart Trading Guides. Short-term trading plan, stock forecast toolbox, longer-term trading, and it gives you more information. Most of the educational content. We have video trainers. You can type in risk management. So we do have portfolio management, money management, trading plan. So please look at these webinars. Jeff, okay, yeah. I mean, Tradespoon, yellow tunnel, the education is free. We don't charge for that, so I encourage you to have a account on both. Yellow tunnel has more trading psychology content. Tradespoon has more, just basics, trading basics. We do have one-on-one coaching. If you can, especially if you have a larger portfolio, you definitely want to consider one-on-one coaching. If you have $10,000 or less, I understand that's probably cost prohibitive. But if you have more than $10,000, then I would consider one-on-one coaching. All right, ladies and gentlemen, thank you very much. Sorry it took a little longer. I will see you today, Scott and and I'll see you at tomorrow morning. Thank you. My favorite quarterly trades. What's the best idea? So please join me tomorrow on Yellow Tunnel, 12 p.m. Central. Thank you.